Hey, good morning, everybody. It's Brian. I'm starting a little bit early, mainly because I've got some other videos I've got to record today. I went down this rabbit hole of automation stuff over the weekend, and I didn't get done some pretty crucial training videos I needed to get done. So I'm going to start this early today so that I can get these other videos knocked out for another platform. So anyway, let's go ahead and get to it. It's going to be super fast. I'm just going to run through exactly the things that we need to know about and then end this call. Probably shouldn't be any more than, I don't know, 10 minutes. Of course, I always say that and then end up going 25 or 30. But let's just see what we've got going on here. We're going to start off right here in the news. We always check the news in the morning. You always want to know what's coming up for the day so that you don't, make decisions around something that you see or you think you see, and it's just kind of a quick move prior to news starting. We don't want to trade into the face of news, right? No matter what you're trading in. If it's high impact news, right? Yellow reports, orange reports, no big deal. We're concerned about these red reports down here. You don't want to trade right into the face of that. Luckily, most of the news comes out prior to the regular trading hours for those that are trading futures, but for those that are trading forex, you're in the thick of it right as soon as the U.S. Trading session starts, which is 7 a.m. Central, 8 a.m. Eastern. That's when the U.S. markets begin. Most of this news comes out, so you want to be very aware of that whenever high impact news is coming out, so that you can maybe wait on your trading day and then do something after news, or whatever your plan dictates. Anyway, so nothing really happening today. Today's a free, clear sailing day. Nothing that we need to worry about stopping what we're doing or changing our trading times around, because there's nothing high impact coming out that's planned, right? Tomorrow's a big day. We've got core retail sales in the morning, but then the big news is in the afternoon as the FOMC statement and economic projections come out, along with the federal funds rate, and then followed by the FOMC press conference. That's the big stuff. So tomorrow is when we might expect to see some madness in the markets. As far as what we're looking at for the day today, I'm starting over here in forex. Same thing that I always talk about: consistency, consistency, consistency. I know, Brian, you always say the same thing. Yeah, because that's consistency. If I always say the same thing, it's because I'm being consistent. If you're here looking for me to tell you exactly what's going to happen in the market today, you're not going to get it, because I don't know what's going to happen in the market today, and I can admit that. You've got all kinds of talking heads out there that'll tell you what they think is going to happen in the market today, and half the time they're going to be right and half the time they're going to be wrong. But that doesn't get ratings, right? When you say I don't know, we do what the market does, right? That's the whole purpose. We want to do what the market does, and we have ways of looking at that. Forex, we have tools to find out which currencies are moving, so we can trade the currencies that are moving. In futures, we have ways to look at market bias. We trade in the direction of the market bias. It's that simple. We don't know what it's going to be, right? I can't tell you what's going to happen 10 minutes from now, 20 minutes from now, 2 hours from now. All the talking heads say they can. They can't. It's bullshit. Just accept that. Accept the fact that you don't know, and have a plan and move forward. Anyway, sorry, going down a rabbit hole. So what's going to happen today? Same thing we always do every single day. We're going to look at forex, and we're going to find out at the start of the new session which currencies are moving, right? Which currencies are strong, which currencies are weak. We're going to pair them together. We're going to go over here and we're going to check and see, okay, if we paired something together based on our currency strength, we're going to have a look at that actual currency pairing and see how it stacks up. Is there opportunity there for movement, right? How are we moving on the day so far versus what a typical day is? Is there room left for that to move? And then, the second piece of it is down here in the volume detail. When it does, begin to move, let's say we're going to, I don't know, let's say we're going to buy pound and sell the CAD. So we're gonna be buying the pound versus the CAD, right? If we're gonna do that, how far does it move for the day? How much does it typically move? Is there an opportunity to get a quick, 20 plus pips out of that on a breakout. And if it's going to move, and if we're planning to buy the pound, does our volume detail support the direction that we're planning to go? That's all we have to do. We just have to look at that, do a little bit of basic analysis, and then make a decision. Don't overthink it. Definitely don't overthink it. The thing is, where most people get hung up, they overthink it. They go, well, it's not there, but I think it might be there later today. So if I wait, can I do this? Can I do that? Can I do this? Can I do that? No. Just look at what your plan says. And if it doesn't meet the criteria, if the volume detail isn't in the right direction, or whatever it might be, or the current day's range has exceeded what the threshold is for you to be comfortable taking that 20 pip trade, looking for 20 pips of profit, then don't trade it. But Brian, I don't have a trade for the day. Oh my God, there's worse things that can happen. Just don't trade, right? If it doesn't meet your plan, don't trade it. Have a plan, stick to the plan. If the criteria doesn't meet the plan, you don't trade. You move on, you wait for the next day. It's called capital preservation, right? So next up, so that's all we're going to do on forex. That's pretty darn simple, right? Wait for the market to open. Check your tools to see which currencies are moving. Check to see, how the range currently is, and if you're trading in a certain direction, is there opportunity for that to continue to move based on what that typical range is? And then have a look at your volume detail to make sure the buying and selling volume supports the direction that you're planning to go. Right? It's that easy. That's all we have to do. Popping over here to the future side of things, and I'm still using the TradeStation charts. I'll be switching once I get through all the videos I'm doing today. I'll be switching this over to TradingView because that'll allow me to do some other things that I'm working on, and I'll talk about that at another time. But I've got to get through this so that I can get on with that other recording. Over here, we're looking at directional bias. We're looking at directional bias, and we're going to trade in the direction of that directional bias. So the S&P, what's the bias? The 4-hour bias is short. The 30-minute bias is long. They are not in agreement. It's a mixed bias. When you have a mixed bias, that tells us, hey, let's just sit on our hands. We don't need to do anything because the overall, the greater pressure on the 4-hour is down, but the 30 minutes pushing up. We've hit some levels of resistance up here, but we seem to be pulling back off of it. This could mean, we don't know what it's going to mean. I'm not even going to speculate on it because it doesn't matter what my opinion is of where it's going to go. What matters is we go in the direction that the greater market is telling us, and right now it's a little bit mixed up. The shorter term is mixed up from the longer term right now, so we don't need to do anything. Some people go, oh my God, but I've got to trade. I can't possibly not be in a trade for the day. If you have to absolutely do something, if you've absolutely got to scratch that itch, you're jonesing for a trade, play a breakout, play a bounce. There's multiple ways to go at it. Look for the key levels on your platform and play off of those key levels. So for example, right now, 4-hour, we're sitting here, just above 33.93 area, 33.95, and you've got 3,400 above you. 3,400, big whole number. Pressure's down on the 4-hour. Could be a spot to look for bounce trades to sell in the direction of that 4-hour trend, right? So are we going to repel off of 3,400? If it breaks through 3,400 and keeps moving, you might look at 3,410 as a breakout to the long side. But you might look at bounces here first to see if you can't pick up a few points off of a bounce on 3,400. Tomorrow's a big day. I don't know, is it going to push higher coming into FOMC tomorrow? No one really knows. You're going to have all kinds of theories about that, and everybody on the news is going to give you their own theory about what they think is going to happen. But ultimately, again, half the times they're going to be right, half the times they're going to be wrong. There's just, the only way to be consistent is to have a plan and consistently execute the plan that gives you that competitive edge, that quantifiable mathematical edge. That's the only way you're ever going to be successful, is to have a plan that gives you an edge and trade that plan and trade it religiously. Don't deviate looking for the next big thing, the next shiny object, the next, I don't know, whoever is popular right now on whatever station. I don't even watch it. I have no clue. Have a plan, stick to the plan. That's the only way you're ever going to be successful in this game. And right now, if you're trading with the trend and you're looking at market bias as part of your directionality, to say, hey, if I'm going to trade today, my biases need to be the same. They're mixed here, so you don't trade. Okay, you walk away. Nothing on the S&P. If you absolutely have to do something, look for your breakouts on key levels. Look for your breakouts on key levels. Over on crude is mixed as well. The 4-hour bias is down. It's short. Had a big push here just recently, and the 30-minute bias is long. So short, long. What does that tell you to do? Are they in agreement? No. You stop right there. Don't do anything else. If you absolutely have to do something, look at whole numbers. 38. We're in a big, heavy push down in the 4-hour. You might look to these key levels like 38, 38.20, and look for selling opportunities off of those as a bounce. You might even look down here around 37.60, and if it breaks below that, that could be your opportunity to sell short on that crude if you absolutely had to do something. But the biases are mixed. That tells us, if you're sticking to a plan, don't do anything. Don't do anything. Sit on your hands if you have to. Turn off your monitors if you have to. Shut off your computer if you have to. If your plan says don't trade, don't trade. All right. I'm harping on this a little bit because it drives me nuts when folks are like, oh my gosh, but your message is almost the same every single day. That's called freaking consistency. I don't know how I can beat that into people's heads anymore. It has to be consistent. My message has to be the same every day, or you're never going to have consistent results. If you're doing something different every day and you're looking at different ways to trade every single day, you're just chasing your tail. It should be logical. It just makes my head want to explode about that. But stop chasing your tail. God, stop. If you've been doing that for the last 5 years and you've never gotten results, stop for a second and just think about what has led you to where you are right now. It's a lack of freaking discipline to stick to a plan. Stick to a plan. Get a freaking plan and stick to it. Anyway, I'm sorry. I don't need to be yelling at any of you specifically, but I get messages and it makes my head want to explode because it's all about consistency. I don't know why that. I think people understand it at a root level, that it's all about consistency, but then at the same time, their desire for that monetary gain that can come from trading, without putting in the time to learn it, it overshadows the logical steps, which is just be consistent, have a plan, and be consistent with that. So people are just constantly chasing the latest thing. They want to attach themselves to, well, this person was right the last 3 days about what the market was going to do. I'm going to do exactly what that person says. And then the second that person is wrong about it, they abandon that and go to something else, and go to something else, and go to something else, and go to something else. And it's just this cyclical thing of constantly looking for new ways to trade, and you don't need it. You don't need new ways to trade. You need a way to trade that gives you a competitive edge and allows you to execute a plan consistently, and you just need to do that consistently. That's all you have to do. So anyway, it's just, you can tell I'm a little bit frustrated by some conversations I've had recently. I'm doing this because that's the way we have conversations now, is on the keyboard. Anyway, last one before I let you guys go. Gold. Gold over here, long bias. So we are 4 hours long, our 30-minute is long. Hey, what does that mean? Oh my gosh, we've got directional bias that's in agreement over here. So what we'll do is we'll look for buying opportunities on gold. What does that look like? Pullback, could be one. Pulling back down here to 1970 would be a great area to look for pullbacks off of. 1975, I'd like to go a little bit cheaper, down to 1970 if we could. But look for pullbacks, and then that would allow us to go long. If we break 1980, that's a key level up here on the 4 hour, 1980. A break of 1980 would be our breakout long. So if you don't like the bounces, because you'd have to be you have to be buying into a red candle, right? You have to be buying into a red candle if you're going to play a bounce, and breakouts are a little bit easier for our brains to process, because we're trading with the market, the direction of the market and the market momentum at that point. We could look up here at 1980 for a breakout, or there's also that pretty cool process that we talk about quite a bit here, which is letting the market make lower highs and lower lows, and then trailing our entry off the breakout of that previously closed lower high, right? And letting it go from there. So that's what we're looking at for the morning right now, and I'm gonna cut it here and get on with the stuff that I've got to record for these other products. So that's it. That's it. If you haven't had that beat into your head already today, have a plan, stick to a plan what you're going to do for the day before the market starts, and then do that. And if the whatever the triggers are that you've set up to say, I need the market to come to here, or I need this to happen, or I need this to happen in order to take a trade, and those things don't happen, then you don't take a trade. Okay? Plan out your day before you start it, and then do that. Okay? So that's it. I'm gonna let you go and get on with my recording. Have a great day. Bye.